Welcome to Money9 Jhatpat. We're talking about MCLR and home loans. So what is MCLR? Couple from Noida has become battered while living on rent. His family is pressuring him to buy his own house. After a lot of research and news, couple caught hold of a project. The size, price, discount, everything had been decided. The down payment had also been arranged. The only thing missing was the home loan. He went to the bank which had his salary account and settled that too. Then came a call from another bank. Now this bank was providing the loan on cheaper terms. Couple was a bit shocked by this. Then he inquired with 4 or 5 banks more. So why do banks have different home loan interest rates? Many people like couple are surprised by this fact. The secret is hidden in MCLR. So what is this MCLR? Let's find out. MCLR is nothing but marginal cost of funds based lending rate. MCLR is actually a reference rate. You can also call it the internal benchmark of a bank or financial institution. This benchmark is because banks fix the minimum home loan interest rate on the basis of this, which means no bank or financial institution can give home loans below MCLR. In 2016, the Reserve Bank had implemented the MCLR system. Earlier, banks used to run on the base of rate system. Base rate system was introduced in 2010. MCLR is closely related to the repo rate fixed by the RBI and the cost of funds of the bank. In such a situation, whenever the Reserve Bank raises or lowers the repo rate, the floating interest rate of your home loan increases or decreases. If you think that there is no difference in your EMI, then the answer to that is that your EMI does not change due to fluctuating interest, but the tenure of the loan changes. Now, coming back to couple's real question. Why do different banks have to offer different MCLR? So there are many factors behind this. For example, you have to look at the borrowing cost of the bank. That is, what is the cost of raising money to the bank? Now, banks raise money through many channels. These include fixed deposits, current accounts, savings accounts, and many more. Through these, the borrowing cost of the bank comes out. The return on equity is also included in this. The Reserve Bank has also given a formula to calculate the MCLR of the bank. So MCLR is nothing but marginal borrowing cost into 92% plus return on net worth into 8%. Not only this, banks also have to maintain 4% cash reserve ratio, that is CRR. The bank does not get any interest on this CRR. Another factor in deciding the MCLR is the operating cost of the bank. That is, there are many types of expenses of the bank. These include all the expenses like fundraising, capital expenditure for opening new branches, salary of employees, and so on. Now, banks are not able to recover their money from customers. So these things are also added while calculating MCLR. And finally comes the discount or tenor premium. The reset period of interest rate is called tenor. So to broadly understand, MCLR depends on the cost of raising funds and operating cost of the bank. Now you know why couple was getting different home loan rates in different banks.